Welcome, I'm Mark Todd from the NAB, and today in the NAB Trade Meet the Manager series I'm talking to Katrina Burns, who's Wilson Asset Management's Global Portfolio Manager. She's here to talk about the upcoming LIC that they're bringing to market and what she thinks of global markets and why at this point in time they might want to come to the market. Katrina, welcome.
Thank you.
How are things going?
Great. Yeah.
So you've been doing some roadshows, you've been talking to people about the opportunity that you see in market. So can you help everyone understand what you are going to bring to market for WAM?
So WAM Global is really about taking the Wilson Asset Management process globally. We think, this process has worked extremely well in the domestic market over the last 20 years, and it's a process that will work offshore.
How do you give everyone a sense of that process? How do you view these stocks? What would you do to try and pick a stock?
So the Wilson Asset Management process that as I said has been applied over a long history has both qualitative and quantitative elements. We have a proprietary ratings process that really focuses on company management, company's industry position, and then looks at the earnings growth potential of a business and compares it to its valuation. The differentiator for us is that we'll only buy a stock if we can identify a catalyst that will re-rate a stock. So if we can't identify a catalyst, we won't buy a name, and we're happy to sit in cash if we can't identify stocks that fit our process. Okay,
so from an investor's perspective, what would you want them to focus on? How would they, as an investor, what's your raison d'etre? What's your thing that they say, okay, is it just the 20 years? What else would it be that you'd say, look, you need to invest with us because of this reason?
This product has come about because of demand from our shareholders over the last decade. They've continually said, we're underweight global equities and we want exposure to global markets using your process. And so that's the reason for the timing now. But in terms of the process, we really have very much a risk focus in terms of if we can't find stocks that fit our process, we will sit in cash. We're not compelled to buy stocks just for the sake of buying stocks, depending on, if we think things are overvalued, we can hold cash. Yeah, so that differentiates us to other managers in the market.
Earlier I was listening to some chats that you had about opportunities in Japan and different opportunities in the global growth. So it's not just North America, it's other parts of the world, isn't it? How would you characterise the Japanese opportunity right now? Because you always think of that as a really mature market. What's happening in Japan?
Japan had 2 lost decades and since you've had Abe's policies trying to stimulate growth after that a long period of stagnation. But if you look within Japan, there are exciting opportunities. If you look at particular cities like Tokyo, you are getting net migration. And having had a period of such low growth and situation in Japan being that the demographics aren't particularly compelling, and you've got a high level of government debt, that's meant that the housing stock, for example, has been, there's a huge amount of stock that's aged and over 20 years old. And with the upcoming Olympics and Rugby World Cup, there needs to be a rejuvenation of housing stock. So that's one particular area where we're seeing opportunities.
That's a catalyst and that's a sector, and then you're thinking about who's the winner in that, who's got the moat around that, and you're trying to pick a winner in that. Yeah, that's a really good idea. So Wilson Asset Management, you've been there for a while, you were the second employee, so tell me about Wilson Asset Management and your role in it.
I joined Wilson Asset Management at the end of 2003, then worked there for just over 3 years, and then wanted to go work in London, and so went to London and managed global equities, and then came back to Australia, and very excited to be back working at Wilson Asset Management.
So let's talk about the opportunities. How do you see the opportunities right now? I'm mindful of the fact that a lot of people are talking about global. It is such a big market, there's such diversity. Where do you see the opportunities right now for WAM?
If you look at how Wilson Asset Management started and where our focus has been historically from the start of the business, it was really that small mid-cap bias, because if you look at how we invest the money and that focus on companies that are growing, that tends to lend itself to small mid-cap companies. So on a global context, that's, we think there's a bit of a sweet spot in that 1 to 10 billion market cap. MSCI classifies mid-cap at sort of 25 billion under, so it's a different small mid-cap to the Australian market. But we think there's some fantastic companies that aren't as well covered, that have strong earnings growth potential, and that have fantastic businesses, so we see a lot of opportunities there.
Okay, great. Let's talk about risks, just briefly. If I'm an investor, what risks do you think I should try and consider Now, and I'm mindful of the fact that the management, part of the management, is putting money in this as well. So obviously you've got accountability internally. That, you know, people will be saying, how do you manage that? So what risks do you think an investor should start to think about?
Obviously, everyone has to consider their individual personal circumstances in making any investment. This will be an unhedged product. Unless we have the flexibility if there were absolute extremes where we took a view on currency, and if the Aussie dollar was at 50 cents, etc., we can,
it goes up to 130
or it goes to one,
yeah.
Exactly, we can take position, but generally this will be an unhedged product, so everyone is exposed to foreign exchange, so that's one risk, and from our perspective, we think Australian investors generally are underweight global equities and have a lot of Australian dollars anyway, so you know that may not be necessarily a bad thing for them. But obviously, being we will be picking individual stocks, so there's obviously stock risk in any bet. But
any leverage?
No.
Okay, and so then it's just a question of finding the right assets. So one risk, I suppose, is that you might be heavily in cash if you can't find the right thing. So the return might not be great. It might be cash plus smalls. But okay, so it's mainly about the FX to some extent.
Yeah, and the company-specific risk with any. Yeah.
Absolutely.
Yeah.
That's Katrina Burns, who is the portfolio manager for WAM Global. I'm Mark Todd from the NAB. Hope you have enjoyed this video.